Hello and welcome once again to Dukascopy TV. I'm Ben Jones. On the line I have Sian Fenner from Oxford Economics to discuss with me the Australian economy, in particular looking at the interest rate decision and the upcoming GDP release. So Sian, if we can begin by discussing the interest rate decision, it's been held at the record low of 2.5%. Can you explain some of the reasons behind this? Additionally, do you feel it's the right approach?
Okay, against the backdrop of subdued inflationary pressures, which were aided by the strong Aussie dollar, the RBA has actually been able to aid the struggling non-mining sector. They've cut interest rates by a total of 225 basis points since 2011. Now, it is clear that households and businesses have not responded as much as they have in previous stimulatory periods, but there are indeed signs that this approach has aided a recovery, albeit gradual, particularly in the more interest rate sensitive sectors, and that would be such as dwelling investment. We're expecting actually a large impulse of residential construction work to come online this year, which will be quite supportive for the economy, particularly at a time when mining investment will become an increasing drag on growth. Now, looking ahead, we expect the RBA will actually start to normalise interest rates with a possible small rate hike as early as the end of this year. However, any move to a more neutral stance will take some time. Moreover, if sentiment actually remains at current low levels, we would see the RBA postponing any hikes into 2015.
Now, retail sales were also released today. They continue the trend of the past few months, being relatively tame on a monthly basis. Do you see any increase here in the future, and to what extent would this boost Australia's economy?
Well, we've actually been seeing a solid period of sales growth, which, to be quite frank, given the soft labour market conditions and weak wages growth, we were expecting some sort of payback. And this is that today's figures were quite consistent with that view. Looking further ahead, unfortunately, we do not see much upside for retailers in the coming months. Consumer sentiment plunged in May following the announcement of a range of budgetary initiatives, and we expect that this will weigh on disposable income and household spending decisions over the coming months. However, everything's not really all gloom and doom. As mentioned, interest rates are still very low, and there have also been some positive wealth effects from the rise in house prices over the past year. And if indeed we do actually see sentiment improve, we could see households opt to reduce their high savings, which would clearly be supportive of the Australian economy.
And finally, GDP data is released tomorrow. With the current speculation over whether or not China is experiencing a slowdown, what are you expecting from this figure? And how much of an influence will Asia's largest economy have?
Okay, we're expecting the Australian economy to grow by around 0.8% quarter on quarter in Q1. Now, this is only marginally below trend, but saying that, given today's balance of payments figures, there is actually a risk that growth could actually be stronger. It could be up as much as 1% or even slightly above. Now, this may really come as a surprise given the moderation in growth in China over this period, but exports are set to make a large contribution, and we're actually expecting net exports to offset the expected fall in private business investment in this quarter. Now, that said, a sharp slowdown in China will clearly have an impact on Australia's economy. I mean, it is Australia's largest trading partner. And not only that, Australia would be affected by weak growth in the region as a whole. However, at present, while we're expecting China to grow by just a little over 7% this year, we're still expecting a solid contribution from net exports. Partly that reflects the move from the mining investment phase to the production phase, but also we're expecting that imports will actually be lower on the back of lower capital imports from mining investment.
Sian, thank you very much for joining me again. That's all we've got time for, I'm afraid. Keep clicking back though, as Thomas Taplin will be bringing you a piece looking at Turkey. Thanks for watching. Bye for now.